Hello and welcome to Car Insurance Chronicles, a podcast where we discuss and demystify the world of cars and car insurance in order to help you make informed decisions as you navigate the roads around you. I'm your co-host, Brenda.
And I'm Andrea.
And today we're talking about the recent rise in car insurance rates. Whether you're a new driver, experienced behind the wheel, or somewhere in between, understanding how insurance rates are determined can save you money and avoid surprises. Auto insurance is something every car owner deals with, but not everyone understands why they pay what they do. To unravel this mystery, we're first going to look at the factors that influence your insurance rates.
Your driving record is just the tip of the iceberg when it comes to determining your insurance rates. At Insurance Navy, we consider a multitude of factors, including but not limited to your age, where you live, the type of car you drive, and even your credit score. So why do we do that? Well, age and driving experience affects your rate because younger drivers, particularly those under 25, have been statistically shown to be more likely to be involved in accidents due to their lack of driving experience. Older drivers tend to have more driving experience, which often results in safer driving behaviors. However, rates can also increase for very elderly drivers due to increased accident risks associated with possible declines in vision and reaction times. Your driving history affects your rate because having a history of accidents, traffic violations, or DUIs signals to us and other insurers that you have a higher risk for future claims. We use your driving record as a predictor of your future driving behavior. A clean driving record suggests you're a safer driver.
Your location affects your rate, because where you live and park your car affects the risk associated with your car due to factors like traffic density, road conditions, and crime rates. Urban areas, with their higher risk of accidents, theft, and vandalism, typically have higher rates than rural areas. Your gender affects your rate because statistics and risk models have shown differences in driving risk between genders, with young males often being seen as higher risk due to higher rates of accidents and speeding. This distinction can influence insurance rates, although some regions are moving away from using gender as a factor in determining premiums.
Your type of car affects your rate because your vehicle's make, model, and year determine the cost for repair, theft rates, safety features, and the car's overall value. High-performance or luxury vehicles typically cost more to insure because they are more expensive to repair or replace. Your credit score can affect your rate when we use it as part of our risk assessment models, under the theory that individuals who manage their financial affairs well tend to make on-time monthly premium payments and be more responsible drivers. A higher credit score can indicate a lower risk of filing claims. Each of these factors helps us assess the likelihood and cost of a potential claim from you, the insured. By evaluating the risk associated with these factors, we can more accurately price insurance policies to reflect the level of risk we are assuming.
So you've heard what determines your rate, but why are they so high right now if you don't fall into a high-risk category? Car insurance rates can be high, even if you don't fall into a traditionally high-risk category due to several broader economic and industry-specific factors. Here are some reasons that might explain why. 1. Increased repair costs. The cost of vehicle repairs has risen significantly due to advanced technology in newer cars. Features like backup cameras, lane departure warnings, and other advanced driver assistance systems can be expensive to repair or replace, driving up insurance costs.
2. Higher medical costs. The rising cost of medical care affects car insurance rates as well, especially for policies covering personal injury protection and medical payments. As healthcare becomes more expensive, the cost of covering injuries sustained in auto accidents increases. 3. Inflation. General inflation impacts all sectors, including the insurance industry. As the cost of services and goods increases, we may have had to adjust your premium to cover the increased costs associated with claims payouts. 4. More traffic and accidents. With more vehicles on the road, the likelihood of accidents increases. This can be due to population growth, increased commuting, or changes in driving patterns. More accidents translate to more claims, which can drive up insurance costs for everyone.
5. Extreme weather events. Climate change and the increased frequency of extreme weather events, such as hurricanes, floods, and wildfires, have led to higher claims on comprehensive insurance policies. In some cases, your premiums may have risen to compensate for the greater risk of damage from these events. 6. Insurance fraud. Insurance fraud remains a significant issue, costing the industry billions of dollars annually. These costs are often passed on to consumers in the form of higher premiums. And 7. Regulatory changes. Changes in legal and regulatory environments can also impact insurance rates. New laws and regulations affecting claim processes, payouts, or required coverages can increase the cost of insurance. Even if an individual driver is considered low risk, these broader factors can influence overall risk assessments and pricing strategies within the insurance industry, leading to higher premiums for many drivers. We use these models to determine rates, and these models take into account not only individual risk factors, but also the broader economic and regulatory landscape.
Now, we're sure you've been thinking, so how do you reduce your rate to save on auto insurance with these changes? Here are some actionable tips to help you. 1. Shop around. Don't settle for the first quote you receive. Compare rates and multiple plans. 2. Bundle policies. Combining your auto insurance with home or renter's insurance can lead to discounts. 3. Increase your deductible. Opting for a higher deductible can lower your premium, but make sure it's an amount you can afford in case of a claim. 4. Maintain a good credit score. Pay your bills on time and keep your credit utilization low. And 5. Take a defensive driving course. Some states offer discounts for completing an approved course. One of the most important things to remember when reviewing car insurance policies: the most expensive insurance isn't always the best, and the cheapest isn't always the worst. It's about finding the right coverage for your needs at a price that makes sense for your budget.
That's all for today's episode on auto insurance rates. We hope you found it helpful and that you're now equipped with the knowledge to navigate your insurance options more confidently. If you enjoyed today's episode, please subscribe to Car Insurance Chronicles. So until next time, drive safe and drive smart.